Hi there, we're here talking to Anthony Weller with Comparion Insurance Agency to kind of go over how to prepare for getting your first homeowners insurance quote and knowing what you're getting. And so we're going to kind of go over a little Q&A, and you're going to just have that high-level overview of information so that when you do talk to an agent, you're going to be speaking the same language. So, Anthony, what is your kind of take on how much the premium is versus the coverage? Like, what's your philosophy on that?
So when you have a homeowner's policy, you have to really look at things like what sort of value are you going to be getting. Anyone can write a cheap policy just like anyone can write a cheap automobile policy, but when it comes down to brass tacks and you actually have a claim, you can find out that that policy is really, really lackluster. Think of it this way: you can go to the grocery outlet and buy a steak for $2 or $3, or you can go to Central Market and buy a steak for $20 or $30. Finding a steak in the medium there,
yeah,
good idea. So that's where I come in. We look at what you need, we look at your options, and we try and find the best blend of value versus protection for your policy.
Perfect. I like it. That balance is kind of key. Also, we're qualifying you with the premium in your mortgage payment. So it's not just, something to always look for the cheapest rate. It's that value, it's that protection, it's that security and peace of mind if you ever need it. So in an insurance policy for a home, obviously it would insure the home.
Correct.
But how much is that coverage for? If my purchase price was $600,000, what does that look like?
So what we do is when you come to an agent such as myself for a quote, we do what's called a reconstruction cost estimate. So we will look at all the features of the home and the property, and we will put all the numbers in the computer. We'll come up with a number as far as what it would cost to replace the actual dwelling. Typically, an insurance company doesn't cover your grass, doesn't cover your trees, doesn't cover the ground, because even at a total loss, the property is still going to be there, even if the structure is not. So you could buy a house for $500,000, and the cost to rebuild that home is $350,000. So our job is to find out what it's going to cost and rate you appropriately on that.
Awesome. Okay, so it's not the purchase price or the loan amount, it's how much it would cost to rebuild the home.
Perfect.
That
yes.
makes sense.
It's what it would cost to rebuild the home to exactly how it was at the point of loss.
Now, what about the stuff inside the home? Is that insured too?
Yes, it is. So you also have what's called personal property protection.
Okay.
And what that is I like to tell people, if you were able to pick up your house and shake it, anything that falls out is considered personal property.
Okay.
People don't realize how much personal property they actually have, but you start thinking about, okay, what's a pair of jeans cost? What's a pair of shoes cost? Your plates, your silverware, your appliances. It's not just your TVs, your computers, jewelry and watches. It's literally every little thing. And again, in the event of a total loss, we're trying to make sure that we can put you back how you were prior to that loss completely.
Okay, so let's say that I have, an older TV.
Yeah.
Don't tell my husband I just said that, because it's not older. It's only like 2 years old. But let's use my TV as an example.
Okay, so what we do is there's two different rating factors as far as how a policy will pay out. You have what's called replacement cost, and then you have what's called actual cash value. Replacement cost is the better way to go. It is what it costs to replace that product at the time of loss. It does not take into account betterment, depreciation, anything like that. If you go actual cash value, think of it as how your car policy works. You have a car that's 10 years old, you're not gonna, if it's a total loss, you're not going to get paid out as much as a brand new car would cost. You're going to get what that car costs, less mileage, wear and tear, so on and so forth. So personal property will work the same way if you go with actual cash value. It is a way to get a lower rate, but in the event of a major loss, it could leave you. It could really hurt you. It could leave you really shortchanged on a lot of your stuff.
And frustrated.
Very much so.
Like, okay, so I have all this stuff I have to replace in a total loss example. But I'm only going to get this much to replace all that. I'd be so frustrated.
If you're paid 50 cents on the dollar for everything you had in your house, it can get really frustrating really quickly.
Yes. Okay. So I also talk about and look at when especially my first-time home buyers who are not familiar with policies or never seen one before. I see some insurance agencies quote really low, what's called personal liability coverage, and then some are pretty high. And so I'm just wondering, what's your take on personal liability coverage?
I'll answer this in two parts. As a first-time home buyer looking at an insurance policy or going through the process can be very much like trying to sip water out of a fire hose. You're having a lot of stuff thrown at you real quick, stuff you've never heard of, stuff you've never thought of. Hopefully you have an agent that takes the time to actually go through each and every coverage, what it means, why you need it, and set a value accordingly. As far as personal liability goes, personal liability, it's just that. It's if you are held personally liable for something. It could be something as simple as the Amazon guy slips and falls and hurts himself on your property. It can even extend to things off your property, such as, let's say you're golfing at one of the wonderful golf courses around here, and you launch a ball through someone's giant picture window. Ooh. If you decide to file that as a claim, your personal liability protection will protect against something like that as well.
Okay, so let's talk about claims, filing claims. So what's the general rule of thumb? If my deductible on my homeowner's policy was $2,500, what is your take on when to file a claim, when not to file a claim, and the impact of that?
Absolutely. So if your deductible is at $2,500 and you have a loss that's less than $2,500, you're paying for out of pocket. Yeah. Because the insurance company, they'll open and close a claim and say, yeah, it doesn't meet the deductible level, and then you'll have an open and closed claim on your record, which is never a good thing, especially when you're trying to go around and shop different insurance and stuff like that. It stays on for 5 years, so it's one of those things where I tell my clients to take a step back for a second and actually look at, is it going to be worth filing this claim? Is this going to be something that's worth having on my insurance report for the next 5 years? Everyone's situation is different as far as what they can and cannot afford. If it's something where you have a $2,500 deductible and let's say it's a $5,000 loss, if you can swing that other $3,500, I would suggest doing it. But like I said, everyone's situation is a bit different, and it's not a one-size-fits-all. But typically, I tell people to keep their insurance for more of a catastrophic event.
Okay, that makes sense. And if you need it.
When you need it.
Perfect. And so I think that's really good information and understanding overall of homeowners insurance policies